Welcome back to a bonus video. We were going through some of our previously published material in the spirit of backfilling with videos highlighting profiled indicators in addition to a couple of emailed requests for this one. We profiled the Chande Momentum Oscillator, or CMO for short, a little over a year ago, but for whatever reason we never made the technical analysis video. Thinking back, we may have been preoccupied organizing our paper clips or perhaps engaged in another equally important task. We'll touch on what it looks like for a brief moment to get everybody up to speed before embarking onto the technical analysis portion. Recall that this indicator is a below chart, zero cross, confirmation indicator. By the way, we chose to update the results in the blog, so be sure to check them out as well when you get a moment. And if you need the gory details of the indicator, it's all there waiting for you to discover. Recall that this indicator is used to determine momentum, Newton's second law of motion, to help us determine when price is trending. Here is the default image. We're recycling the one used in the blog, but for the analysis, we'll be coloring the candles with customary blue and red. Please be aware that this indicator tends to create multiple signals around the zero line when using a shorter period length, which is normal. However, once a good signal prints, it's very obvious by its departure from the zero line area. Notice that there can be multiple instances where the signal line approaches zero, but does not cross and close on the other side. Never jump the gun and prematurely close a trade. Wait for the appropriate signal before acting on it. Alright, now that we've gone through the obligatory review, let's get to it. Before we get started, we wanted to preempt the analysis with a couple of mentions. First, the default period is 9, a bit quick for reasonable commentary, so we slowed it down to 14. Second, there are areas where the signal line bounces back and forth across the zero line. We won't be calling each signal in these instances, or it would make for a longer and less exciting analysis. We will, however, bring them to your attention as a group to discuss what may happen. We'll pick it up on this first long as the signal line crosses and closes above the zero line. That was damn near a perfect run. We were in at nearly the absolute start of that move and out when price flattened as volatility left the market. Good stuff. Let's see how this next short does. With flattened price action, we get a signal line that doesn't move with a lot of momentum and generally hovers around the zero line. As a win-loss signal, this would have been a loss, but within an algorithm, this trade probably wouldn't have happened. Either way, mark it up in your trusty dog-eared journal. Now the long. That was another sweet trade. Picked it up at the bottom and the exit was actually not too bad based strictly on the signal line. Pretty quick response to a strong change in price. Another great run. Did you happen to notice that halfway through the move the signal line touched the zero line but did not penetrate it? Keep your socks on and never jump the gun. Let the indicators tell you what to do. Now along. Alrighty, a small loss. Mark it up and let's see how the short goes. And we made up for that loss in a big way. Great rundown and a stellar exit. This could have been a continuation trend if the rest of your algorithm was still in a short condition, or you may have not even exited with that loss. Either way, profits to fund that trip to Aruba, Palma de Mallorca, Disney World, or whatever floats your boat. As we mentioned earlier, we would skip over areas where multiple signals occurred as commentary would probably put you all to sleep. What we can and should say is that due to this indicator's reactivity around the zero line during times of low volatility, be sure you're taking into account the rest of your algorithm. Even putting on your second confirmation indicator would knock out most of those false starts. Now let's take a look at that strong move up. The entry into that long was pretty definitive, and the ride up no doubt lined your pockets. Again, a great exit for minimal losses. Good stuff. That would have been a winning trade, but the strong market reversal would have held you at gunpoint for the money you just took out of the market. Most likely your stop loss would have signaled the exit long before the indicator. Entering on that reversal candle would have been a bit scary, but with your stop loss in place, you already know what your risk is, so you forge on like a battle-hardened soldier, taking it up for the win. We had a couple of signals during that sideways market. Probably a pass with your algorithm, so let's see what happens on the strong move to the south side. No matter what happened during that flat market section, this nice smooth run down would have proven profitable either way. It's the long game we are interested in playing. Slow and steady wins the race. On to this last signal for review. And we'll call it here. I think you've got the picture. Gotta love zero crosses, they're pretty clear. Just be sure you wait for the signal to come to you. It's enjoyable to visit with old friends, especially when they can help us fatten our wallets with easy-to-use indicators. This tool might make for either a good C1 or C2 due to its reactivity to market price and how you set it. Why don't you go get it and give it a try? Who knows? Maybe this trip down memory lane was worth the effort. You know the drill. We don't preach what we don't practice. That means no financial advice, only educational material to help you find your way down the path to becoming a more proficient trader. You can do this, and we want to help. Now go get this wonderful oscillating bucket of goodness and slap it onto your charts. Our only goal is to make you a better trader.